Oh no, your 401k just tanked. I'm sorry. That sucks. We've all been there. We've all experienced that. But don't worry, there are some options. We're going to talk about four of them today. Hi, I'm Chris Schwegel, CEO and founder of Chris Connects. We are a real estate syndication company who hooks you up with investment opportunities that give you passive income. So, we're going to talk about 401ks today. There are some ups to them. There's a whole lot of downs to them. In fact, 2022 was a very bad year for Wall Street in general. Not only is there a lot of third party risk there with different governments, the Fed, also with companies, corporations, valuations, all that kind of stuff that's out of your control. Also, there's fees on top of all that kind of stuff. And you've got to wait to get your money until later. You're either going to pay tax on it now or you're going to pay more tax on it later. But besides all that, most people use a 401k. It's very easy. You can shut your brain off and just give your money to someone else. But unfortunately, sometimes that goes bad. This year, the Dow Jones is down 8.8%. By this year, I mean in the year 2022, the Dow Jones went down 8.8%. Nasdaq was down 33.1%, and the S&P 500 was down 19.4%. This is terrible. This is terrible because most people have their investments, most people have their future wealth, their retirement into these 401ks, and they just went way down. Add on top of that the pandemic pressures that everybody is under, and on top add on top of that to inflation, which is further eroding everybody's money. Inflation is something that erodes everybody's money. What in 2022, depending on who you ask, is anywhere between 8% and 17%. I think for the sake of this video, we'll talk about 10%. So if we take a look at each one of these indices, whatever. So the Dow Jones was down in 2022 8.8%. Now, a common misnomer here is saying, hey, if it goes up 8.8% next year, I'll be even. That's not exactly right on. You'll still be negative. In fact, you need the Dow Jones to go up 9.6% to be even. But then you will be 2 years of inflation behind schedule. So if we're setting inflation at 10% in 2022 and 10% in 2023, you would need the Dow Jones to be up 27.2% in 2023. It's possible, but that's asking quite a lot. The S&P 500, let's pivot to that. That was down 19.4. We need that to perform at 24.1% in 2023 to get up to even. If we want to be even with inflation and have the same purchasing power in 2023 as 2021, we need to have 43.9%. That's a big, big, big ask of the S&P 500, especially because we don't have much control over the S&P 500. Nasdaq is even worse. It was down 33%. To break even, it needs to be at 49.5. To break even with inflation in 2023, we need it to be at 73.4%. So if you are heavily invested in NASDAQ, you need it to perform at 73%, almost doubling your money next year to break even with inflation. That is risky. Now, there are some options that you have. We'll talk about 4 options that you have now if you were to decide to pivot out of your 401k. This happens all the time. I'm hearing more and more about people who did it. I did it maybe 6, 7 years ago. I did one of these options, and I've just never looked back. And I hope that you have the courage, the bravery, and also seek out the knowledge to do one of these options yourself. We'll talk about option number 1, which involves nothing really. You can just double down. You can just pretend like nothing's happening. You certainly have the right to be ignorant. You certainly have the right to, say, it's going to bounce back, or I don't know what else to do, or my financial advisor has told me that things will be okay. You absolutely have the right to do that. And I think we should applaud the fact that you are investing in the first place. I mean, you are setting aside money for the future. You are budgeting less than your what you're taking in. I think that's fantastic. You have room in your budget for investments into something, and that's awesome. And we should applaud that. And so I think option number one, keep on keeping on. Just kind of put your blindfold on and keep on keeping on. Certainly an option. Option number two, you could cash the whole thing out. Yeah, you've got the option to do that. You can just go to your financial advisor, your fiduciary, whoever has your 401k, and just say, I'm out. Give me my cash. And they have to give you the cash value of your investments. Now, there will be a tax penalty with that you'll have to pay in whatever year you decide to do that. I have no idea about your tax situation, so I'm not even going to begin to opine about what that might be. Talk to your CPA, talk to your financial strategist, all the people in your life that you talk to for financial support about whether or not this is a good option for you. I actually did this route. I think it was 2015, I want to say. I did this route. I had maybe 100 grand in 401ks. And I talked to my financial advisor who said, no, don't do it. It's the worst thing you're ever going to do. And then I talked to my CPA, and my CPA said, no, don't do it. It's the worst thing you're ever going to do. And between me and you, because no one else is listening, it was one of the better things I ever did. In terms of money, anyway, it was one of the better things I've done. The reason why is because I got my money out of a place that I couldn't control. I got my money out of a place that had a lot of risk. I certainly paid quite a fair share of income taxes that year. But then again, I got down payment for a duplex and the renovations. And, that is still helping us out and hedging inflation, kicking out appreciation, kicking out depreciation for our taxes, kicking out cash flow. So all was well with that. But you will hear from everybody who's involved in, Wall Street, paper assets, the 401k business, that you shouldn't do that. So be mindful of that as you go into it. It takes some fortitude, and it takes some courage to say, give me my money. But you for sure can say, give me my money. Now, option number three, you can move your 401k in some instances. Some instances, like for instance, if you still work for your company, you maybe have to leave your current investment in that 401k or 403b or whatever sort of mutual fund investment you're in. But you may have the option of transferring it or doing a rollover, as they call, into a self-directed IRA. Now, this is an account where you can um, determine what you're going to put your investment dollars into. So you're taking some of the control away from whoever is in your HR department or whoever is your fiduciary or financial advisor. You're taking some of the control and trust away from those people and saying, I think I can do a better job picking stocks, picking other asset classes, perhaps picking, gold, Bitcoin, art, precious metals, whatever it is that you decide to invest in. I know there are a few no-nos in that area, so you'll want to work with whoever your custodian is for your self-directed IRA, and there are tons of reputable custodians for self-directed IRAs out there. But make sure that you are investing in something that you are not personally using. I think that's the biggest no-no. Again, I'm not a attorney, I'm not a financial strategist or accountant. I've been there, done that, and so in my experience, I've noticed that you can't like invest in any sort of you know property that you are going to use. You can't invest in any sort of like collectibles you're going to use or anything like that. But other than that, you can pretty much put your money into any sort of stock or mutual fund or REIT or a whole bunch of projects out there that aren't available to people who have their money just in a typical 401k or mutual fund. Then the fourth option, the last one, you could do a rollover into a type of self-directed IRA called an EQRP. This is a type of solo 401k. So I know I'm getting in the weeds with all this kind of definition. So that's why I've got my email on the bottom. So if you want to reach out and ask any sort of questions, I'm happy to answer them to the best of my ability, or to get you connected to, the experts in this field. I'm happy to do that. My email is chris@chrisconnects.co. That's chris@chrisconnects.co. Just reach out if you have any sort of questions, whatever. Or if you just want to ask me anything, happy to email back. I answer all the emails within 24 hours. No big deal. So hit me up if you feel so inclined. But with an EQRP, what you can do is, like a self-directed IRA, you get to choose, but you also get to choose an option that has debt. Now, why is that such a big deal? Well, if you use a self-directed IRA to invest in real estate, or to invest in a real estate syndication or project, and there's debt involved, you will have to pay a very high tax called UBIT, UBIT. Now, if you were to use an EQRP, then you have total freedom over your investments. You have total freedom over whatever you want to invest in. But you can also invest in something with debt with no penalty. So you can buy a house, you can buy a duplex in a EQRP with debt, put financing on it. It could be 100% financed if you want. Well, I guess then you wouldn't actually need any money. Anyway, you can use finances, you can use loans on your properties, you can renovate the properties, just as long as you are not personally using them. I think everything is good there. Also, you can invest in other people's deals. You could invest in a real estate syndication. You can invest in a movie syndication. You can invest in a car wash, or self storage, or ATMs, or gold, or oil, or whatever you decide was best for you. So that's an option for you if you want the maximum control, but still have your money in a retirement account that you will need to wait for. So just to recap here, the S&P 500, Nasdaq, and Dow Jones are all down. Inflation is way up. People's wealth has been dramatically diminished and deteriorated, and that is awful, and that is sad. And there's a bunch of people out there who don't know what they can do, or don't know what options they have. And I just want to educate some people and help them start thinking about ways that they can help themselves out now and in the future. So your options are to keep pressing on. You can also cash out all of your mutual funds or 401k. You can roll over into a self-directed IRA at times, or you can roll over into an EQRP and get involved in real estate investing. I hope that this is helpful. If you have any questions, reach out. I'm at chris@chrisconnects.co. Until next Wednesday, we'll see you then. Take care.